Blog Talk Radio.
Good morning. Hello, everyone. Welcome to the Money and More Network. I am your hostess, Wendy Cassera from Taxpectations, and we are a program that discusses your money, success, taxes, finances, business, personal, life, whatever all that money and more means to you. I come to you every Saturday morning from the comfort of my home here in Myrtle Beach, South Carolina, but am available to listen anytime, any place, anywhere that you are or want to be. So thank you for joining, and I hope that you enjoy the show. You can find me on Taxpectations.com and Facebook and Google Plus and all those other wonderful places, LinkedIn, et cetera, et cetera, et cetera. Websites up, have some really neat things going on there, including a list of events and all the places you want to go, and some nice worksheets of things that we've discussed in the past that you can download and keep for yourself to use to help you with your money and more and your success. Success, of course, is whatever it means for you. So we're going to start with our quote of the day. No. First, let's do the IRS disclosure, and then we'll go to the quote of the day. The following statement is in compliance with IRS Circular Number 230. The advice provided on this show is not intended to be used and cannot be used by you or any other person or entity for the purpose of avoiding penalties that may be imposed under the Internal Revenue Code or any appropriate state or local tax law. Further, this advice is not intended to be used and cannot be used by you for the purpose of promoting, marketing, or recommending any tax-related matters addressed within to another party. You are not prohibited from sharing this advice with third parties. Any third party should seek their own advice based on their own particular facts and circumstances from an independent tax advisor. Yes, the independent tax advisor, that would be me. So give me a holla. Give me a holla and I will help you. Okay. So, quote of the day, there's two. One's very short. I just liked it. Why have a bad day when you can have a good day? It's got a picture of butterflies, really cute, Dr. Murad. The big quote of the day, life is like a camera. Yes, not a box of chocolates, but a camera. Life is like a camera. Just focus on what's important and capture the good time. Develop from the negatives, and if things don't work out, just take another shot. I like that one. I thought it was kind of really super cool, so I thought I would share this morning about the life and the camera. Very exciting, very exciting. Okay, so we are going to talk about, yesterday something happened to me. I was at a networking event, and a lady piped up, one that I hadn't met before, and she had a question about being audited. Apparently she went to a tax preparer who guaranteed her that she would not be audited. And I attempted to explain in the networking event that there is never, ever, no one can ever guarantee that you won't be audited. There's no such thing. And it got me to thinking about things, because I know that there's some sites that will say, well, if you are audited, we'll represent you. Some sites that say they'll pay fees, et cetera, et cetera. There's all kinds of things. People are attempting to, lure you in to work with their service. And, I went on to explain that if ever there was an audit from a tax return that I prepared, that I would be more than happy to represent the person. And if it turned out it was an error that I made, I would, of course, pay the fines and penalties. But there's never, ever, ever a guarantee that you won't be audited. And I thought to myself, why don't we go over some of that audit information? A lot of people are terrified. The whole word audit is big terror, and it really doesn't need to be. One of my things is taking the fear out of money for people, and taking the fear out of an audit is probably a really, really good idea. Probably it is. There's no probably. So I thought I would give some information today on audits. What triggers an audit? What are your risks? What are the statistics? All that other kind of stuff, so that we can take some of that worry and fear out of it, and get you to thinking about other things. The less worry there is in the world, the less fear, the less stress, and we can all have a little bit more fun with our money. Okay, so Now, as a tax preparer, I'm required by the Treasury Department rules to assume that every return will be audited. Okay, when you look at my website, it says all roads lead to taxes. I am assuming, even with my bookkeeping clients and my coaching clients, any of my clients, I assume that the IRS is going to, when I'm what's the word I'm looking for? When I'm coaching, when I'm giving advice, when I'm talking about it, you have to assume it from a window of it's going to be audited, so we need to be able to back up everything we say and everything we put on the tax return, et cetera, et cetera. So that's what I mean by assuming that every return is going to be audited. I don't want to have superfluous things on there that we can't back up and causes issues and yada, 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 yada. Anyhow, so first, statistics. Okay, we're going to go with a few statistics first. There are 316.1 million people in the United States. Okay, 316.1 million people. Now, in the year 2011, there were 142,823,105 individual income tax returns filed. Okay, so 142 million income tax returns filed. Of that, 1.1% were audited. So out of 142 million, 1.5 million, not quite, million tax returns were audited. Now last year, the statistics drop a little bit more. Last year, only 0.96% of all individual tax returns were audited, so even less than 1%. And I can guarantee this year, with all the IRS budget cuts and all the other stuff, they have less people, so the likelihood of that being less this year is even greater. But let's go back to a few more of our statistics. The larger the income, the larger chance you have of being audited. For instance, if your income tops $1 million, your audit rate is up to about 8%. If you make under $200,000 adjusted gross income, it drops to 0.88%. So a little over 0.75%. So, it goes up and down. Now, business returns are a little bit different. Business return, if your adjusted gross income is between $100,000 and $200,000, you have about a 0.7% chance of an audit. But if it goes up over $200,000 to $500,000, you have a 2% audit rate. And then, of course, if you go over $1 million, you have a 7% audit rate. 7% of audit rate on your adjusted gross if it's over $1 million. So it's actually corporations with total assets of $250,000 to $1 million. 1.5% of those corporations were audited. Only for partnership and S corporations under $250,000, only 0.4% were audited. So I know statistics, and I just threw a bunch of numbers, and everybody's going, what does all that mean? But it shows you the likelihood of being audited. I mean, there are some probabilities that you could win the lotto before you get audited, but it happens, okay? And there are a lot of, we're going to talk about in a little bit, ways to proof your tax returns, things they look at during an audit, or what triggers an audit and all that other stuff. But you have to understand it's like reading tea leaves, okay? There could be some absolutely no reason whatsoever. There was an article. I was doing a lot of research when I decided to do this on the show today, and I mean, there was an article in there from one guy who said, well, because he didn't vote for Obama, he got a higher audit, which is, of course, really. There was another guy in there who, said that he made so much money last year and he didn't make any this year and he's going to be audited. There are a lot of wives' tales. Lots of old wives' tales, new wives' tales, lots of reasons why people think they are, they aren't, they can, they can't, all of that. The tax preparer you use has no bearing whatsoever on getting on being an audit, unless that tax preparer has been has gone through the whole IRS process of of being investigated, criminally investigated, and things were found to be determined criminally negligent, then they will sometimes pick some of that tax preparer's returns and audit them just to make sure that they were done correctly, that kind of thing. But that is a very, very rare case. If they find that a tax preparer is being criminally negligent, they are no longer allowed to prepare taxes. They take that away. So if you have a tax preparer like myself that has a PTIN number, which is a paid preparer's tax identification number, you can also look up on the IRS website to find out if they are listed there. And of course, now with this new this new test that they're taking with tax preparers that are following the new registration process, you have to go through a class and take a test. I passed! Yay! We can be. Oh, wait. What do we do with that? We go.
It might seem crazy what I'm about to say. Sunshine, she's here. You can take a break.
Spend too much time on that, but yeah. Anyways, so preparers who take that test and pass that test, they're going to have a special link on the website, on the IRS website, so you can go through and find out who's keeping up with some of their credentials. Now, that's not required. There are tax preparers that have a PTIN number that are not listed there because it is not a requirement. It's voluntarily. But I definitely feel that having an education and keeping up with the tax laws is important when you're choosing a preparer. I gave this statistic at the networking event yesterday, and I believe it was the last time I looked at the tax code. There was a tax code change, 1.5, I believe it was, every single day last year. So that goes up and that goes down. That is mostly federal, but there's state tax law changes as well. All of that. So. Anyhow, back to the audit stuff. Dun, dun, dun. Audit. So, yes, there's lots of old wives' tales that say what's going to trigger an audit, and a lot of them are dog-a-doo-doo. So there's ways to look it up, and there's ways to avoid it. Let's use the very first and most important way to avoid an audit. Don't make stuff up. I was going to say a bad word on the radio. Don't make stuff up, okay? Don't put it on there because it looks good. One of the phrases that the IRS loves is reasonable and customary. So use your reasonable head judgment when you're putting stuff on your tax return, okay? One of the things, don't claim flaky deductions, okay? Don't mix your personal and business deductions on your Schedule C for your business. That kind of thing. But, if you take a reasonable tax position, then you can defend it very easily if an audit occurs, if it comes up. And if you can defend it, you're good to go. Reasonable and customary. Let's review that just a little bit, okay? You made $50,000 last year, and you spent $20,000 on meals and entertainment. Is that reasonable? Absolutely not. Okay. Now, if you're a restaurant and you spend $50,000 of your $60,000 on food, okay, a little excessive. I hope you're not doing that because it means you're pricing wrong, but totally unreasonable for a restaurant. So keep an eye on that reasonable. Okay. Don't. One of the other things they look at is taking higher than average deductions, right, in comparison, and that's what that means. It means if you're making $20,000, don't take $40,000 in deductions and have $30,000 of it be meals and entertainment or some other high out-of-the-way expense. As a tax preparer and an accountant, I'm using myself as an example because I know me, right? If I make $50,000 in a year and I spend $15,000 on travel, they're going to go, what? Because customary average deductions say that most of my Expenses are going to be local. Now, of course, there's the IRS tax forum, and there's other means to travel. It's not saying don't travel. It's saying be reasonable with your deductions. And again, if you're in business, do you have an extraordinary amount of travel? Do you have an extraordinary amount of meals and entertainment? That kind of thing. A lot of people will attempt to kick down their tax by putting way too high charitable deductions. Yes, you probably gave to Goodwill. You took a bag of clothes down there. But a bag of clothes does not warrant a $5,000 tax deduction because you know you spent a lot of money on those clothes originally. You have to be reasonable, okay? Don't claim flaky deductions. Dun, dun, dun. And we'll go a little more over that. When you're doing your tax return, it is always good to use a professional. You don't perform open heart surgery on yourself. Most people don't perform a root canal on themselves. You know, there are all these. The reason that we go to school, and the reason I have, as somebody said the other day, more degrees than a thermometer, is so that I know what the IRS is going to allow and not allow, so that I can get you the most bang for your buck. Ladies these days, they don't even do their own hair. They go to, go to a hairdresser. Get a professional to do it. Looks better. It's more even. You're not worried about missing that, big spot on the back part of your hair. There's lots of reasons why it's always best to use a professional. And if you're not using a professional for whatever reason, not a good idea, there are commercially available software packages out there. The biggest thing that I can say about the commercially available software packages is making sure that you know how to answer all the questions and that everything is in there. If you don't understand something or you think it's wrong, don't skip it. Don't kick it out just because you want to get a really high refund or whatever. Investigate what's going on before you just throw it all away. Also, checking your math. When you use, you're in business and you use a software like QuickBooks, right? And you have all of this stuff entered into QuickBooks. You do it, your bookkeeper does it, your accountant does it, whatever. And you have all your stuff entered into Quick Print out a profit and loss report so you can create your tax return from that. Make sure that those reports are correct. When I'm going through and putting things into QuickBooks, for instance, you go to the gas station and you go to get gas and you hit the account drop-down box in QuickBooks, and I'm using that just as an example. You have everything listed in order. Now, if I'm clicking through and I'm doing a lot, there's a chance I'm going to click on advertising instead of auto because it's the one right above it. Okay, right? Because I'm a human being and I'm going through and I'm doing a lot, or the mouse slips or whatever. So before you use that report to create a tax return or give it to your tax preparer, make sure it's correct. Go through each section. Even if you look at it face value, if there's $1.5 million in auto expenses, maybe somebody put a zero in incorrectly, that kind of thing. Keep an eye on the math, what looks right. I know that one of the things that I do with my clients when I'm reviewing their profit and loss statement every month or every quarter, however we've agreed upon, one of the things I do is percentages. You want to know if you've got your return on investment. You want to know, is your payroll 76% of all of your expenses? If it is, it's too high. So kind of do those kind of checking, that kind of math to make sure that everything looks reasonable on your profit and loss statement, right? Another trigger for an audit is income, failure to report all taxable income. And there's several things on here that you need to be aware of. Number one, if your business is customarily a cash business. So for instance, let's use a coffee shop. You have a coffee shop and you take cash, you take credit cards in your coffee shop. You go through, You do a certain amount of credit cards, you report all the credit card income because, of course, that's reported on your 1099-K, and you send in your tax return. Now, the IRS knows that it's a partial cash business, and if you're not reporting some of that cash, it's going to send up a red flag because they know you're taking cash in. There's not a coffee shop on the planet that doesn't take cash in. You know what I'm saying? So, again, it goes back to that reasonable and customary. That part is customary. It's customary for a coffee shop to take in cash. You need to report some of that cash. And if you fail to report all of your taxable income, dun, 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 there's a big red flag. Another income reporting is 1099s. Now, a lot of you, like for instance, I am as an accountant, I receive 1099s from people who have used me for their bookkeeping services, and so they paid me a certain amount each year. I'm going to get 1099s from them, and well, I should. When I go through to prepare my own tax return, I have 1099 that I receive, and let me tell you what happens with that. I enter every 1099 I receive, and then I take that amount out of my gross receipts at the top of my profit and loss, because the 1099s plus the rest of the income, right? And that's my income for the year. About 5 years ago, I guess it was, I went through, did my tax return. You know, of course, I'm going to take very good care of my own tax return. Went through and put my 1099s in, put my income in, sent off my tax return to the IRS. Well, about 2 years later, one of the companies that I had done some work for got audited. It was determined that they never sent out 1099s to people they should have. So in the mail, I received a 1099 2 years later. Now, there was no reason in my head for me to amend my return because I stated my income correctly. However, I got a letter from the IRS stating that your income has increased by the amount of this 1099. And it took some letters and some back and forth. I had to prove that I included that 1099 income in the original tax return, and which I did. And it was not that big of an issue because I keep good records. However, if you're really rushed your tax return done and you don't include that 1099 income, you can then be subject to penalties and interest because you understated your income. Even if you originally included that dollar figure, but if you don't include that 1099, it comes back to them as not having been reported. So it thinks you've understated income. Remember, I've talked about several times before, the IRS is ran mostly on an automated computer system. It gets scanned in, it reads it, it can't find it anywhere, it kicks you out a letter. It's a big pain in the backside to fix these things. So make sure that when you do your tax return that you include all of your 1099s, 1098, which is your mortgage interest statement. The 1099s also include interest, dividends, tax refunds, miscellaneous income, any of those things. Those are all 1099s of different kinds. And now, of course, this year we have the added forms, the 1099 forms that are going to be coming from the Health Exchange Marketplace, and the 1099s that are going to be coming from the your insurance company, et cetera, et cetera, et cetera, because now we have to include all the medical insurance information on your tax return. And I am grumbling. You heard my voice change. I am a tax preparer. I'm not an insurance agent. Anyhow, back to this. So make sure that you report all of your taxable income. Really, really super important if you do not want to be audited. And it is important on your tax return to be concise, truthful, and accurate. Be accurate, okay? There are ways of coming up with information deductions that you may not know about because you're not a tax preparer. And so it's okay to add these things, but you also don't want to give them too much information. If you're giving them tons and tons of information that is superfluous, it's going to trigger an audit because they don't know what to do with it all. Really? Keep it simple. KISS. Keep it simple, stupid. Keep it simple when you're giving it to the IRS. You want to be concise, truthful, and accurate. Put all the information there, but you don't want to give lots and lots of extra information that is going to confuse the masses. Make sure that you assemble your return correctly. There is some forms. Sometimes there's forms that you have to send in to the IRS. Even if you electronically file, if the IRS needs a specific form, there's a form that you fill out that says, I have forms, and you send the form in with the forms, showing the forms that you need to send to the IRS for your tax return. So make sure that you send them in. If you're paper filing, especially attaching your W-2s and that sort of thing, will get it going a little bit faster. Also, we talked a little bit about amended returns because I talked about the fact that I hadn't amended my return at that time. It's really something you need to take in consideration when you're thinking about things. Is it worth it to amend your return? Now, if you find that you have a fairly good size income or deduction that was not put on the original return and it's going to make a significant difference on your tax return, yes, of course, you must amend your return. I mean, it's important. But if you forgot a deduction that is going to account for a very small amount, I mean, like, it's not going to make any difference. You can't even go out to dinner on this amount. Is it really worth it to spend the money to amend your return and go through all the paperwork back and forth and all that kind of thing just to get your return done, your amended return done? So think about that before amending a return. Also, another thing that a lot of people, and this has got nothing to do with actually with an audit, but a lot of people do and think about is occasionally when you're getting a tax refund, you can check a little box that says, I want my refund to be applied towards my tax next year. Yeah, we like to have a little bit of money back in our pocket so we can go spend it. But if you have a big plan for growth the following year and you might have a chance of paying taxes next year, it's really a good idea. It's like paying a estimated taxes, so it's kind of really super cool. Now, before we close out the audit thing, there's another thing that I wanted to bring up. How does an audit occur, right? Now that you've gotten a letter stating you're being audited, what happens next? The first thing that's going to happen is you're going to get a letter from the IRS that says you are being audited. Dun, dun, dun. On the letter, it's going to tell you what part of your tax return is being audited. And 99.9% of the time, it's going to say, this is the paperwork we want to see or the proof we want to see, which will include copies of receipts, a copy of your profit and loss, something, right? They tell you what they're auditing and why they're auditing, not always why, because, you can never quite understand all of the verbiage they use, but they'll tell you what part of the tax return is being audited and what they want to see during the audit. Now, one of the things that I have overseen many audits, state audits, federal audits, industry audits, etc. Workman's comp audits every single year. So an audit is not always this big monster thing. But one of the things that is best is to keep copies of everything and keep it nice and neat and organized. Because if the auditor says, okay, I just want to see, I don't believe all of your auto expenses, for instance, okay? So you go through your list, you go into your QuickBooks and you print out that account information for your auto expenses, and it shows each person you paid and how much you paid to each gas station, the repairs, whatever, if you're not using mileage and you're just using the regular. And if they want to see receipts, you go to the box where you put all of your stuff for this year together and you make copies of those receipts. You take the letter they sent, the report that you got off of your accounting software, copies of those receipts, and you mail them in. There's a big chance they'll just say, oh, okay, that works, done, and your audit is over. In fact, when I was looking up all of these statistics, of the individual audits that occurred, 78.3% of audits were completed as just correspondence. Doesn't mean somebody's going to come out, knock on your door, and demand to see your underwear. It just means they want more information. And if you are organized and together, and by that I don't mean you have to have you have to have all these folders and you have to have all of that. When you're done with your 2014 tax return this year, create a box, create a file system of some sort, big mark on it that says 2014 taxes, and store it somewhere. That way everything is in one place, and if in 2 or 3 years you get audited or there's a question about something, you go to that box and you have one place to go through it all. Okay? Now, some people do put it in a folder so they have all of their auto expenses in one folder, and they have all of their meal receipts in another folder, et cetera, et cetera. I myself, when I organize my stuff, I do it by month. So all of my expenses for January are in 1 month, February, and I've got it marked really nice. Those 12 envelope or 13 envelopes, because one is for miscellaneous tax documentation, those all go in a box marked for the year, and they go into storage. I also now scan everything in, and I keep them in folders for each month so that everything can be easily accessed. Now, of course, if you've done that every month, scanned it all in, keep it in a folder on your desktop or somewhere on a thumb drive, external hard drive, then when they ask for that information, all you have to do is attach it to an email or attach it, print it out, whatever you need to do, and get them the information that way. Really easy to do if you're just even semi-quasi organized. And again, if you just throw it all into a box, it's in one spot. I have presided over, as I stated, several audits, and I've represented people whose tax returns I didn't prepare. That's not a pre-qualifier. But if you get an audit letter, the best thing you can do is to find a professional like myself and have them help you understand what information the IRS is looking for on that page. And again, statistics show 78% of those, a little bit higher than 78% actually, the audits got completed with just correspondence. Paper through the mail, back and forth, all done. Yippee, skippy, happy. We like happy, right? So make sure that you understand the letter. As I stated, 316 million people in the United States, only 1.4 million tax returns were actually audited. And those 78% of those paper, they didn't have somebody come out to your house or to your business or whatever. And again, when an auditor comes out to your place of business, and I've done a couple of those as well, several of those, they're usually pretty nice. All they want to know is that you have proof of what you said, you have a reasonable explanation for why you thought you should take that deduction, et cetera, et cetera. There are several things I discussed, like yesterday when the lady was questioning me about audits. I said, one of the things that's really big with an audit, when an auditor comes out to look at your receipts, as all of you know, that awful thermal paper that's used at the check register, the cash register when you go to check out at things, sometimes fades really fast, which is another reason why I think it's important to scan things in right away. Take your money Mondays, Monday morning, scan in your documents from the week before, put it on your thumb drive or your folder, so that those can be even legible, easy to read 3 years from now. Also, don't deface the front of your receipt. And never, ever, 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 I don't know if you know this, but ever, like really important, ever use a highlighter on a receipt. It's the writing away, and the IRS, when they do an audit, can disallow deductions because they can't read the receipt. And you don't want that to happen. Now, if you think there's something important that needs to be put on there, for instance, you have a meals receipt and you pay $28.71 for the meal, and you gave the waiter a $5 tip, right? You can write on the bottom where there's no print, add $5 tip, or on the back of the receipt. If you went to lunch with someone and it's a business deduction, you should always write who you went to lunch with and, that kind of thing. Write it on the back of the receipt. When you scan in both sides of the receipt so you have that information. Don't deface the print on the front of the receipt. Also, another really big one that I have seen a couple times in it. A lot of times the IRS will accept your bank statement as proof of payment, so proof of a deduction. Like you can't find the receipt, so you use the bank statement. To my knowledge, the only deduction that the IRS will never accept a credit card statement or bank statement for is a motel bill. As you all know, motels can be, you can charge a movie, you can charge other stuff, things you purchase, whatever, to the bill. They want to see the bill, so never, ever, ever get rid of those motel bills. Keep those. Anyhow, I could go on and on and on and on and on and on and on because that's what I do, because I love what I do. Um, so I hope this helped you. It helped you not worry so much about an audit. If you feel you're going to be audited, if you're not sure, give me a holla. Give me a call because that's what I do, and I will help you. You can reach me at taxpectations.com, Wendy at taxpectations.com. Find me on Facebook, Google+, LinkedIn, all those other things. Keep in mind, in 2 weeks, I'm going to be on a cruise, and you should come with us. There's still spaces left. Cruises never fill up all the way until the day of or whatever. I don't think they fill up all the way anyways. But you should come on the cruise and see what's happening in the world. Anyhow, I hope you have a wonderful day, afternoon, evening, weekend, week, going forward, 2015. Lots of great things going on in the world. And enjoy your day. Let's do some happy for a moment.
It might seem crazy what I'm about to say. Sunshine, she's here. You can take a break. I'm a hot air balloon that could go to space. With the air, like I don't care, baby, by the way. Because I'm happy. Clap along if you feel
happy, happy, happy. We like happy. In case you ever missed it, as part of my radio show, I like to be happy. So, again, thank you all. I hope you have a wonderful day, afternoon, evening. I think I said all that already. Just be happy. Go out into the world. Remember, it's a choice. You can be mad or you can be happy. It's all a choice. Choose happy. That's what I choose. Have a wonderful day, and we will talk again next week. Thank you. Goodbye.